I'm Ashton Addison from the Crypto Coin Show, and today on Blockchain Interviews, we have back with us Oliver Gale, the CEO of Panther Protocol. Oliver, welcome back to the show, and it's great to see you.
Hey Ashton, thanks a lot for having me. It's a pleasure to be here again. I feel like I've done this show with you maybe twice before. We've covered central bank digital currencies, we've covered Panther before, and it's just a pleasure to be reconnecting.
Definitely, and I'm excited to hear your insights today on zero knowledge, privacy, integrating that into blockchain. I feel like it's a major narrative that is going to bring a lot of benefits to the people that are using the technology. And I feel like how blockchain started, it definitely isn't as private as it could be, especially as institutions are getting involved in things like that moving forward. I would love to start off our conversation by just sort of getting a high level on what you and your team are working on at Panther Protocol and from a privacy and zk perspective. And then we can sort of dive into privacy and Panther as a whole.
Yeah, sure. So Panther has been working for the last 3.5 years now. My co-founder and I have been building a team and building this protocol with the vision of enabling compliance and privacy in on-chain finance / the world of DeFi. And over the years of development, and there's also been a major shift in the regulatory approach, and in fact a lot of clarification and moving in the direction that we thought at inception was going to be inevitable. And that was that one, privacy is very much needed and important, not just for society, but particularly for power users, in this case financial institutions. Mm-hmm. And secondly, that unstoppable privacy was not going to be received, embraced, or even allowed in some cases in multiple markets, many markets, most markets. And today that's played out as we forecasted it would. And so what Panther builds is a set of these on-chain financial tools that benefit from what is really privacy or confidentiality through the use of zkSNARKS, but which also essentially partition the protocol into zones and allow for zone managers to set their own AML programs and custody data on board users and interoperate selectively with one another. And so the net effect is you end up with like a heterogeneous cloud of zone managers, each with their own jurisdictions, user bases, use cases, compliance programs, transaction monitoring or reporting requirements. And yet this decentralized cloud of zone managers can interoperate and share users or transactions and otherwise engage in the business of international finance. So that's what the protocol achieves. And yeah, we're close to mainnet. So it's been a lot of research and development and some adaptation to the changing environment. Like the early Panther evangelists would have seen that the protocol was very much focused on unstoppable privacy, surveillance resistance. And whilst we still hold those core values, now the implementation is very much more focused on this, hey, if you have a financial institution license and a market and a go-to-market strategy, we can provide you infrastructure essentially in a multi-chain or chain agnostic fashion.
Wow. No, that's really good to know. And especially for institutions and enterprises, I'm guessing, not that they're doing anything wrong, but they want to make sure that their competitors and whoever else aren't knowing every single move that they make so that they can make a move on, first on the privacy perspective. Can you talk about, from somebody who understands Bitcoin, Ethereum, and the level of transparency that it has, you can look into a blockchain address or transactions and see everything pretty transparently. How would an institution coming into blockchain or decentralized finance look at that and be like, okay, there's a lot of things that are not good for our business in making sure that we have a first mover advantage. What's the kind of technology we're looking at Panther for these specific technologies to ensure that we can protect our personal insider information in the company?
Yeah, well, I think if you're an institution and you've been tracking crypto, it's been around for well over a decade now. So many banks and institutions have been tracking the technology, and we've gone well past the stage where cryptocurrency or on-chain finance, DeFi, is something that can be ignored or written off. And so now the stance, I would say universally for financial institutions and TradFi markets is, okay, this thing is here. We need to be part of it. It's been growing incredibly well. There are huge advantages to using a blockchain. So how do we enter the market and what do we require? And so that list is fairly universal. Trust is required. Security forms part of that. You need to have affordability. The service needs to be accessible, affordable, useful, something that can generate revenues for these businesses. And there's a lot of growth opportunity in the DeFi space, in the blockchain financial markets. And then once you begin to go further, this is one of the major stumbling blocks, and it's been an impediment to many such privacy protocols, which actually focus on private tokens, which is not something Panther focuses on. Panther focuses on private and compliant financial infrastructure, but they've been delisted from exchanges, barred from usage, and that really doesn't help adoption. And that's because right near the top of the list, after you satisfy, is there like commercial value in doing this? The next question is this something I'm allowed to do? Does the law permit it to does my regulatory license permit it? Is it within the scope of my license or within the scope of another license or outside of the scope of all licenses? And outside of the scope of all licenses is where most DeFi sits today. And that's been, I would say, the biggest blocker to institutional adoption. Now, if you can solve the compliance questions, which is one of the problems Panther tackles, then comes this question of, but what's the advantage to me as an organization executing my transactions on chain? And so then you have a set of trade-offs. You inherit the network effects, the composability, the innovation, the inflows of capital and new users, millennials, Gen Z users, this type of thing. But then on the other side, there's a massive trade-off, which is everything you do is transparent. And you've got Arkham Intelligence and Nansen and Elliptic and Chainalysis and any number of systematic data analytics firms, funds, adversarially extracting information and trading against you. Mm-hmm. And that really works. That really works against the institution. So with this, the emergence of things like real world assets and interest in actually adopting DeFi comes the question of how can we make it compliant and how can we protect our alpha? And Panther is addressing two of those problems.
Mm-hmm. No, I think that's incredible because, as you sort of mentioned there at the beginning, in the infancy of privacy, it was like, Monero was sort of the example of if we could just build a coin itself and have an ecosystem there that it's built into the coin, then people will just use that. But that's not feasible and it's not practical and it's probably not lawful for institutions to be like, let's just trade in this one specific cryptocurrency. They want to use Ethereum, they want to use DeFi, but they want to have some kind of protections with the major assets for their institution. So building a software like this makes much more complete sense than trying to use some coin that is, not exactly, it has nothing to do with DeFi and financial trading.
Yeah. And I mean, further, I would say, if you were to use, an institution could technically accept Monero, mm-hmm. but they're going to have to do a source of funds check, which is equivalent to carrying a big bag of cash to a bank and saying, I want to deposit a large sum of money. And they're obviously going to have questions and it's going to be highly scrutinized. And if you don't provide the tools and the integrations and you change people's workflow, there's really a disincentive to use it. And so that's what has happened with privacy native tokens and coins and projects that don't enforce honest behavior, really. And so, again, Panther takes this approach of saying, look, there's a shielded pool. The shielded pool is partitioned. There's zone managers. Every zone manager can configure and control their own zone. And we found that those discussions and those business development conversations around integration and usage of Panther Protocol have gone very well, and particularly in the area of tokenized assets. So real world assets coming on chain, billions, hundreds of billions in some cases of dollars worth of assets migrating on chain. And it's just unacceptable. For example, for Bob, who owns LP shares in, fund A, B, and C, to have that information disclosed to the market. And there are many reasons why. And the top of that list is privacy is a right. That's the first reason. But then there are these other much more practical and economic drivers, like I might lose money if people counter trade against that or front run my trades, entering or exiting a position. And we see that in DeFi every single day. Whale watchers and subscription services that sell user data and analysts that come on chain and break down the wallet and the structure and the portfolio and the fund flows, infer all sorts of sensitive information. So if you address that, still provide access to composable DeFi, and you can do it in a way where you have assurances around adhering to regulation, you get a win-win on the use of pseudonymous public blockchains, which is where 99+% of the liquidity and value lies today. And so, and again, we've really been careful in the architecture of Panther. We take a chain agnostic approach. So actually, a pseudonymous permissioned blockchain, say something built on Corda, is also something that in theory Panther can deploy on and enable those users to have a level of statistical privacy and access within that ecosystem. So we don't take bets on long-term bets, at least on one type of blockchain or another. Our bet fundamentally is pseudonymous blockchains are the prevailing standard with the network effects, networks like Ethereum, Solana. These network effects are going to be very difficult, if not impossible, to be overcome, which means the reality is the pseudonymous ledger is the future of DeFi. And therefore, there's a problem. And we can solve that by being a composable building block within DeFi.
No, I understand that the market is huge. And the blockchains as they are now will only continue to grow. And then the compliance and privacy aspect of that will grow even more exponentially. And with I love what you said also there about permissioned blockchains and enterprises and institutions. They might be using different technology, but being able to apply that to that as well. I feel like wherever they are, they're going to want to have Panther's kind of technology for the privacy preservation. Now, with the compliance and having a verified user, I don't know if sort of the example of coming with a bag of cash to the bank and say it's an institution that did accept that, but they need to go through the compliance or verify their credentials. From what I understand, with Panther, you're able to do the compliance, but also have a ZK or privacy aspect to it. And I saw something about a Purify partnership where you're already working on this compliance. Can you talk about that compliance aspect and what benefits the technology has that you guys are bringing into that?
Yeah, sure. So the Purify partnership was completed at Q3, Q4, or Q3 maybe last year. And the purpose of that was to enable the first compliance layer for access to what will be version 1 of Panther, which, as I mentioned earlier, is slated for Q1 launch if all goes well. I'd say Q1, Q2, quite comfortable in that timeline. So Panther V1 has one zone, and the zone is DAO controlled, and it has or required strict KYC AML limits. And so things like transaction monitoring limits, as well as the requirement that the user go through some form of verification from an AML perspective. And what Purify does is it aggregates what I'd say, TradFi compliance tools, and then provides them on chain through its protocol and DAO to other DAOs and protocols. And so, so we can access all of that bleeding edge compliance technology, or rather the DAO can, and actually the user can access that technology in order to get a verified credential. And so there's a few innovations there. One is the deployment of one of the first zk AML or KYC on-chain schemes. So we built circuits for the Purify team, the zk circuits, to be able to prove and verify that a user, for example, was over 18, that their ID that was submitted and the selfie that was done were verified. And we use zkSNARKS to enable that prover and verifier mechanism to happen without actually needing to disclose the underlying data. And in this case, that data is self-verified because the user is interacting with the DAO and it's a decentralized zone. What the user is really doing is going through an onboarding flow and self-verifying. They're directly interacting with Purify to have their verifications checked and a zero knowledge proof generated. That proof generation component happens through the Panther protocol. And once it's generated, the user now has this mechanism to access the Panther zone by essentially submitting their zero knowledge proof. That's verified and they're given access to the protocol. So in the default scenario, the protocol actually hasn't collected any information because the user self-verified with Purify. Purify doesn't collect and store that information. That information is stored in a data safe, and that data safe is controlled by the DAO. And so in the event that there was a enforcement action or licenses are required at some point to run this type of system, all that data is securely stored in an MPC multi-party computation, secured vault, data vault, and the user can have that data disclosed in order to remain compliant, and business as usual can continue. So that's what the Purify integration was about. And the way to think about Purify and the scope of Panther is Purify is one KYC AML vendor and integration service, and Panther's in discussions with many other digital identity providers and on-chain compliance providers, and also in discussion with institutions that have no on-chain compliance tools and actually don't wish to change their compliance systems at all. And so then it becomes a case of checking their off-chain compliance. And again, if the institution that has the license says that Alice and Bob are verified and they're able to access a Panther zone, and through that zone they can access a set of financial services, then that's sufficient. What Panther will do is generate a credential, and those users will be able to come to the Panther hub and access DeFi services by essentially submitting their credential that will be verified in a zero knowledge fashion. And so again, they have access to DeFi, and in the normal course of business operations, no information is essentially disclosed about them. And in the case of an institution, that institution already had that data. It was likely stored off-chain. In any event, if it's stored on-chain, Panther integrates. So there's this integration layer and an ecosystem of DID providers that Panther is building out, looking ahead and seeing a world where DeFi consists of a number of different verification methods or digital IDs, and a user has a menu that they can select from and say, oh yeah, okay, well, to access this DeFi protocol, digital identity service provider 1, 2, or 3's credentials can be used. There are a number of institutions that I have verified with. Instead of me resubmitting all of this information and going through the KYC process from scratch, what I can do is connect my digital identity to the protocol in question. And if there's missing information and queries are made, that information is submitted. And that can significantly reduce the overhead for compliance onboarding, which is going to make, DeFi 2.0, if you will, a very smooth, composable and seamless experience, cheaper, faster, more secure, more flexible. So that's where we firmly believe we're going.
That's great. And yeah, no, it's nice to, it has to be done, but it's nice to do it in a way that you can preserve as much privacy as possible for institutions and for personal reasons to get into the system. And now, once you're into the system, I want to if you could paint a nice picture of how exactly you obviously want to have all the privacy technologies, but you also want to make it easy for institutions to not have to go through all these steps and understand the convoluted nature of it all. In that, say I have some Ether and I want to go into the Panther zone and do some borrowing, lending. From what I understand, you can deposit assets and then they turn into some kind of Z assets where zkSNARKS are involved with them, and then you can make trades and then you can bring that out. Maybe you could paint a picture of how exactly that would look like for an institution that's putting a large amount of capital in.
Yeah, sure. So for an institution to put a large amount of capital in, they would either have had to set up their own zone and operate that zone under their licenses, or they will have had to become a customer of someone else's zone. So I mean, like let's assume that's an asset manager or platform like Coinbase, someone who, or any broker, someone has a brokerage license and custody licenses. And so the institution is already a client uh, of that financial institution. That financial institution has a zone. That's path A. Path B is they're running their own zone. They set up and manage their own infrastructure. They already have their licenses and they're interested in trading their own assets and those of their clientele. So one way or the other, there has to be some KYC. The KYC can be done in advance from pre-existing customers or zone manager going through enhanced due diligence to get a zone. Or they will have to do the KYC checks or KYB checks as they connect their wallet. So step one is connect the wallet. Step two is select your verification method and again, verify that you are authorized to access the protocol. That can be done like a sign-on process, connect the wallet, those checks are done in the background. Either you're prompted to begin KYC, KYB onboarding, or you're already KYC'd and onboarded. So nothing really changes in that framework for what AML compliance looks like in Web2 finance today. Well, so once you're within Panther, you get a beautiful interface that allows you to essentially deposit your assets. And once you deposit them, they're self-custodied with the protocol. Those assets are under the control of the institution, not in control of the protocol in any way. And there's no third-party custodian. And the institution deposits those assets. They get a one-to-one representation called a Z asset. What's happening there is a subledger which is managed by Panther Protocol, and that essentially every user has a Z account. The account has balances and a transaction history, essentially a transaction graph attached to it. And that graph is protected by zkSNARKS. So it's a zero knowledge infrastructure. So when you come to essentially say, hey, I want to withdraw assets. So you deposit the ETH, you want to borrow against your ETH. That would require an adapter being built into a protocol such as Aave. Now, Panther's built adapters into Uniswap, Paraswap, Curve. We're really focused on DEXs because we see that as the first use case, really swapping assets. And the nice thing about building into these existing protocols is you can tap into all of the existing liquidity, which is one of the core features we think is important and crucial here. Institutions need liquidity before they're even interested in the conversation. So we're providing them access to the liquidity. So if it were, like let's say Aave, we build an adapter into Aave, and then once the wallet is connected, the institution will see that Aave is an interface that they can connect to and interact with as normal. What's happening is Panther Protocol is doing all of the interacting on chain on behalf of the institution. And so from an on-chain perspective, what you see is Panther Protocol contracts interacting with Aave contracts. You see, from a gas perspective, the institution is not required to pay gas fees. Gas fees are paid by bundlers, and those bundlers essentially will finance the cost of execution, which would de-anonymize an actor in the first place. And so the institution borrows the assets that they wish. They secure the collateral directly onto the third-party protocol. That interaction is managed through Panther. And then if the institution wishes to take those assets back into their native wallet, it can withdraw those assets to a clean address. And so all transaction linkages between the deposit address and the withdrawal address will have been broken. And at the same time, it's not to say that that information is lost. All of that transaction information is managed by the Panther zone manager. And so they will have access to that transaction information and they can carry out AML transaction monitoring. Again, it might be an institution's broker or their asset manager, or maybe the institution themselves. So the information is not lost. It's just confidentially and securely custodied with a regulated institution.
Yeah, that's very cool. And that's great to hear about the gas. And yeah, you don't want to you have to make sure all of the steps are you're not de-anonymizing yourself by having to pay the gas out of your wallet that you just shielded. That doesn't make any sense. But what
Yeah, and it's very easy to do, mind you. I mean, true privacy is exceptionally difficult to enforce, and it's not something. Panther is not a comprehensive solution to avoid any on-chain tracking. But what we really do focus on is this on-chain transaction linkages. But there's like IP address linkages, device leakages, all sorts of other factors that provide information on who you are. I think the most important one and the biggest is the fact that these pseudonymous ledgers track every single transaction in a publicly searchable fashion immutably forever. And so it's unprecedented. It's unprecedented the amount of data and access one has. You can literally look at any wallet and see what it's ever done and every other wallet it's interacted with. And if you have enough resources, you can just data crawl all of them and so pick up information on affiliates as well. So it's a very scary thing from the perspective of what bad actors can do with this amount of data.
Definitely. But I love that the focus is on liquidity. Of course, if you're an institution, you're not going to go into somewhere that, sure, there's extra privacy, but it's illiquid because you're going to be losing a lot of money. To tie into Uniswap, Paraswap, these top dexes, it makes it like you need to be at the place where the best, that's the most important. Privacy is a secondary. You can't sacrifice a huge spread and the cost of trading just for a bit of privacy. So that's great to hear. And now with 2024 so far, you know, the ETF approvals, we're seeing billions of dollars of trading volume from institutions and TradFi into Bitcoin. I feel like that's a big catalyst for institutions to now, once they, it's almost like that trigger that happens in your head. Once you have Bitcoin, then you're looking for, hey, this blockchain thing is awesome, and let's go deeper into it. And that's where DeFi comes in as well. I'm curious on, you know, what are your thoughts on the success so far of the ETF and how that may translate into more institutions being ready to trade in DeFi and using Panther's technology for it?
Well, I think first and foremost, this Bitcoin spot ETF approval in US markets is a massive achievement that has been something that was really a dream and a fantasy of Bitcoiners a decade ago, and even less than, much more recently than that even. So how far we've come is astonishing, because really the thesis behind Bitcoin has always been that it will be adopted as a global monetary system. And the ETF approval is the biggest signal yet that that is successfully happening. And it happened with the staunch opposition of the SEC, which, again, is a double victory here, because if anything, that was hugely opposed on a political level and basis, with complete disregard for the fundamentals of the technology and the fundamentals of adoption and the value add that Bitcoin has really created for hundreds of millions of people thus far, and that will continue in the decades to come. So I think there's a huge achievement, and I agree. You swallow the Bitcoin pill, whether it's directly in a wallet or through an ETF, and many people don't come back out of that. They fall down the rabbit hole and end up investigating and exploring what this thing blockchain, which really is the technology. Bitcoin is a brand and a network of users. That network of users is powered by the technology. And so once institutions experience Bitcoin and see, equally importantly, that there is a regulatory path to adoption and that the trend and precedent is being set, the Bitcoin spot ETF is very likely going to be followed by an ETH spot ETF, and applications have already gone in for a Solana spot ETF. And again, these are just the early steps. So institutions then, and again, we have these discussions all the time. So this is now in practice. It's not hypothetically what would it look like if we were to do something with a blockchain. It is, we are in the middle of a tokenization effort for real world assets and our infrastructure, and we plan to bring it to market, or we have come to market and we have a problem. And the problem is the compliance systems or the privacy systems are lacking on this chain. And so there are two solutions. One is migrate to another chain that's not going to have the same liquidity and services that you're interested in, and hope you can build a network effect, which is what all permission chains run by banks have attempted to do, and they've had no success in gaining network effects in an open, in an open network manner. They've tokenized assets, and they can do institution to institution transfers, and that becomes this question of, well, what's the efficiency? This database is difficult it reaches consensus. That's expensive. It's between trusted parties anyway. There's no outside access. There are no network effects that we're actually tapping into. And so those experiments have really been a lot of hype and some experimentation, but no real traction. And so where the market is today is, hey, there's so much traction, whether it's stable coins or DeFi or the advancement of new primitives in this space. Compliance systems are emerging. Real world assets are being tokenized, and we really can benefit from these network effects. So great. Now I want to do that, but I don't want to be on the whale watchers x.com account every time I move assets. I don't want my ultra high net worth individuals and client base footprints to be inferred and then sold for $12.99 a month for a subscription fee to anyone who's willing to pay for it. So this is where Panther is now coming into the conversation, and what the protocol essentially enables is a pitch that looks like you can keep your compliance systems, nothing has to change. You can keep your data storage, nothing has to change. You can keep your user journey, nothing has to change. What is going to change is what that linkage looks like on chain. We're going to break that transaction linkage. You'll be able to maintain your licenses and do all of your reporting. And we're going to do this on any blockchain that it makes sense to deploy on. So pick your chain, show us the use case and the value, and we will assist deploy that for you. And the longer term vision is go to the open source foundation page, look at the GitHub, read the documentation, and do what you want. All the tools are there. There's a community, a vibrant community. It's all free. You don't even have to own the governance token to use Panther Protocol, but if you want to, there's some benefits there.
Mm-hmm. Very cool. And you mentioned that Ethereum ETF next and Solana as well. I feel like once that Ethereum one gets approved, people are really going to wake up to DeFi, because Bitcoin is the orange pill you swallow, and then once you get an Ethereum, you definitely never go back. So I'm very excited for that. And hopefully the timing is divine with the launch of Panther's mainnet as well. I know you and your team have been working on the protocol already for many years. I understand right now in the testnet, it's possible to use most of the functions and try it out. And in crypto, time moves fast. The mainnet's just around the corner as well.
Yeah. So I mean, we have regretted in the past putting timelines on when we're going to deliver things, because inevitably other things, dependencies come up. I mean, stage 3 testnet was delayed because they were missing libraries and there were bugs in libraries that our development team had to find, which takes time. Also, the scope of work, optimizations of circuits can then require reconfiguration of prior work. So stage 3 was really was a heavy lift, and we were wrong on when we thought we would release stage 3, but that's behind us now. Our testnet is broken into 9 phases, and each phase at stage 3, from my discussions with the tech team, is more or less the heaviest lift. So stages 4 through 9 will be faster in terms of delivery. The team is working ferociously to deliver. As I mentioned last year, there was a lot of re-architecture. There was a lot of research and development. We published some very interesting papers on sort of the use of monomial snarks to make proving times 140 times faster for cross-chain messaging. So there's some things that we're doing which are really future projections, and then there's the implementation of V1 and ensuring that architecture is right. Q1 is the target. I'd say Q1, Q2 is a reasonable time frame. What we've been doing as the foundation and development team is really focusing on our communication. And so it's really more about, hey, what did we do last week? What are we doing this week? What is coming up next week? as opposed to you can get this on this date or you can get that on another date. And so that's been an ongoing area for us of really investment and recruitment to improve our communications and marketing. And again, I think with tech, in the testnet, which is an incentivized testnet, by the way, i.e., testers are rewarded in zkP ultimately for contributing and helping us to identify process improvements and bugs. So, the way to get involved right now is to jump into the community, join the conversation, ask questions, begin testing. And we're working on a couple of other exciting innovations and processes around the zkP governance token as well, which is something that powers the ecosystem, and it's an important instrument in the scalability and growth of Panther Protocol.
Incredible. Well, I appreciate all of your insights into zero knowledge and the privacy aspect of DeFi and Panther. I have been following up the updates. It seems like the team, yeah, you're right, is very they're very consistent in like, okay, every week there's an update, much more than many other blockchains that I've seen. So props to you and the team for keeping everyone updated. And it's nice to hear of the incentivized testnet. It's always nice when you're able to test something and you're also incentivized in getting some of the zkP before the mainnet launches. That's always usually a very promising thing. So I'm looking forward to following along those updates leading towards the mainnet. And nothing is ever concrete in startups and business of like, especially something so innovative as this, that it's like you can plan the day of 6 months before when you know what's going to happen. So the weekly updates are more than enough, I would say. I really appreciate all of the insights you brought today, Oliver, and I'm definitely going to follow along with the weekly updates leading towards the mainnet, and I'll also leave in the show notes a link to the community, as you mentioned, the testnet and the protocol site, everything down for the viewers to check it out below. Let's definitely follow up closer to the mainnet launch or just after in the near future.
Yeah, man. Thank you very much, Ashton. And looking forward to the next follow up. And I would say, again, I mean, you put in the work, you're going to see the output. We have a growing pipeline of announcements and improvements and innovation. And we were lucky in some sense. It's like half planning and half luck. But when we began Panther Protocol, we were very early in the zk space. It was like June 2020 when this thing started. And so in that sense, we created our own luck, and we were able to get healthy. We raised 30 million. We actually raised 32 million and returned 2 million because it didn't pass AML checks. We raised 30 million net. Over the course of 2021, we had a very successful public sale, and that community is very important to us. And so those, the timing of the public sale was maybe fortuitous to some degree, but we set ourselves up to be successful in that way. And the objective, and when we geared the financials, it was really for us to be able to build with our heads down, regardless of what the market condition was through the bear market, which was inevitable with the 2020 to 2022, early 2022 bull market. So the thesis was get capital, put your heads down, do the R&D, build the product, be ready for the next adoption cycle. That's where we are. And so the timing is good. And we're going to see exactly what that means in terms of performance when we release this, retail and enterprise enabled multi-chain privacy protocol to the Web3 space. And the team at Panther Ventures is very energized, and the foundation. So lots more to come. Thank you so much for having me really representing Panther, and looking forward to the next one.